Monday, May 20th, 2024, Maneco 64, home of alternative economics and contrarian views. We're going to look at a few different things today, but the main theme today is how the world's becoming more chaotic and turbulent, and also how that's coinciding with the collapse of the paper game on COMEX and the LBMA, and how China, or Shanghai more in particular, is taking over the physical price of gold and silver. And yeah, I'll start right off the bat. So why is that so important? Well, I've been saying it for years, even before I started this channel, when I was working in the financial markets in London. And I started following gold more closely after 2002, when I bought my first gold coins. And that, of course, was not the business that I was involved in. That was done just privately. I was a government bond futures and options broker for institutional clients. But once I bought my first coins, I started following gold like when I was at my desk every second, basically, along with the other stuff I followed. And I realized that there was something going on, and I went on to learn about how the bullion banks traded gold through the futures market on COMEX and also through the LBMA. There's a lot of leasing or naked short selling, I would say. And those who don't believe that, I mean, just look at GameStop. They do it in every security, every currency as well. That's how the FX market operates. So I knew back then that we needed to, if you really wanted to fight the bankers, because they were going to keep the price of gold and silver controlled and suppressed for as long as possible, because they need to keep their fiat game going. Unless unless we started buying physical and taking the physical off the market, that would keep going on for a long time, and it did. But now there's something completely a bit of a game changer, I would say, when the biggest and probably, arguably the fastest growing, and in the last 30 years, the country that's become wealthier than any other country in history, the quicker, and has a population of almost 1.5 billion. They're going in with both hands, buying physical gold and silver, and that's the Chinese, of course. They don't want paper. Yes, there are some Chinese who speculate on the Shanghai Futures Exchange, but there's also the Shanghai Gold Exchange, which anyone can be a member of in China. And that's a physical game. And there's also the retail part in China and Hong Kong, who are buying a lot of physical. And it's interesting because some months ago, a lot of the Chinese banks left the LBMA. I think it was late last year. And we've seen since December the price of gold in Shanghai and the price of silver traded a large premium versus the London, New York price. And in December, for example, that premium really forced the paper price of London and New York to spike above 2,100. Yes, it came back down, and it corrected back below 2,000. I think it was in February this year, or even before that. But that premium is continuing because not just the Chinese, but the Chinese in particular have a very big appetite for physical gold and silver, and there are reasons for that. I think on the official side, the government side, it's not just China, but all the other countries that are challenging the West. They're accumulating a lot of gold reserves, and they have been for 2.5 years, because they want to get away from using the dollar amongst themselves. So their currencies are fiat currencies, but if they have big gold reserves, they will trust each other a bit more, and that's how it works. I'm not saying they're going to back their currencies by gold, but if you have a country like Canada that has no gold reserves, and I know Canada as a country has a lot of gold resources, but that's different. If Canada were to join BRICS and start printing a lot of Canadian dollars, I don't think that would go down well. They'd have to have some gold as well to trade with these other countries. Before we go further, just wanted to let you know that Miles Franklin still has quite a few specials. They've got 1 ounce growed Krugerrand, $49 over spot. They've got a tenth of an ounce Canadian maple leaf, $29 over spot. They got 1 ounce silver Krugerrands, $3.10 over spot. And they've got half an ounce Canadian polar bear silver coins, $2.50 over melt. So if you're looking to add on, or if you want to buy gold and silver for this first time, call them at 1-800-822-8080, mention Monaco64 or Mario. You can also email them info@milesfranklin.com and mention Mario Monaco as well. I'm not saying Canada is going to join BRICS, just giving an example of how it works. So there is the old saying, he who has the gold makes the rules. And I think he who also controls the price makes the rules, the price of gold. And I think China now is in that situation. Some people would argue, well, China has only 2,200 odd metric tons of gold, its central bank. Well, there has been a lot of research done by people like Alistair MacLeod and others who are very reputable, 3 or 4 different guys who have gone through the numbers, and the fact that China, being the second biggest gold producer in the world, keeps all its production domestically. They argue that China has probably, including the People's Bank of China, but also other state organizations, they have more like 32,000 metric tons, and that's why they're able, I think, to control the price. So, yes, we stackers that have been at it for a very long time have to thank the Chinese. And why? Well, because they're stacking physical gold and silver, and I think that's what's happening. And what about the chaotic, turbulent world? Well, we saw what happened yesterday. The president of Iran and the foreign minister and a lot of important Iranian officials crashed, had a helicopter crash and died. I'm not going to speculate whether it was an accident or not. We're going to let that, time tell what is going on here. I think it's important to see the reaction of the Iranians themselves and what they say, the Iranian officials and their allies as well. But it's not good. We know what's going on in the Middle East and also all around the world, Ukraine and vis-a-vis Taiwan. I see a lot of saber rattling. And again, I said last Saturday, I did a video about the 2-day meeting between President Putin and President Xi. And it wasn't just those two that met. The most important people in the Russian government and the central bank went there. I was listening to the Duran, Alex and Alexander. They're very good in terms of geopolitics. And Alexander said that it's probably the most significant kind of unofficial alliance or get together of 2 major powers in modern history. Maybe, maybe the get together of the British Empire and the U.S. during World War II was as important as well, but he thinks it might be even more important. So I think that's what's going on here, and that's why gold and silver are reacting like they have. And that's not even talking about the fact that the fundamentals for gold and silver are better than ever. And by that I mean, the national debt, deficit spending, rising prices, monetary policy. They're all pointing to a lot weaker dollar, and rising gold price is just that. Many people don't realize the name dollar comes from a weight of silver and gold. So the American currency, the paper dollar, is the anti-gold and silver. So it's the only way for fiat currencies to truly devalue. They can devalue against themselves, but that's just a silly game that fiat currencies play with each other. The true devaluation is versus gold and silver. And that's what I'm seeing. And the chaotic and turbulent world means less cooperation between all the major powers. We're going to just have cooperation, Russia, China, and the rest of the world, and the US and NATO and G7. It's not going to be as a friendly a world as it had been up until, let's say, 2 years ago, from the early 2000s or late 1990s, i.e. globalization. And that's going to affect all the supply chains. And not just that, the fact that the Chinese, the Russians, and all the other BRICS countries, even Saudi Arabia, are becoming less and less dependent on the dollar will mean less demand for the dollar and for all the other major Western currencies. So that's what's going on out there. And now I wanted to talk a little bit about gold and silver itself and how I see gold and silver. So if you've been, like me, slowly trying to buy physical gold and silver over the years, over the decades, and you have been patient and you sat through because you know what the end game for fiat currencies is, right? End game is that they always go to zero. You should just sit tight and watch. And that's what I'm doing. Of course, there's a lot of you out there who haven't pulled the trigger, who are saying, should I buy gold and silver now? Well, I think it's still early days. I think there's a lot of water to run under the bridge, so to speak. I think the cycles still point to a few more years, at least, of a bear market in the fiat currency, a bull market in gold and silver and commodities. And as for the miners, of course, that's a different story. The miners is more speculative, and I have some, and I plan to add some miners, but it's still it's not a big percentage of what I have, because I'm cognizant of the fact that we could have some turbulence within the financial system, and the more you have in the financial system, the more dangerous it is, even if you're doing well. But it's up to you, to make your decision of how much risk you want to take. And a lot of people ask me, what about the great taking? What if they take my mining stocks? But don't forget, David Rogers Webb said that it's not necessary, or it's not a certainty that the great taking will happen, especially now that so many people know about it. They might not be able to do it. And his great taking as well was, the premise of it happening was a complete deflationary collapse, which we still might have eventually. But right now, I don't see that. What I'm seeing now is a melt up. So that's how I look at it. I'm not saying you should go out there and buy miners. But anyway, Many of you know that I like technical analysis and fundamentals. And of course, being a broker, I had to know what was going on. I traded for myself a bit, not that much because of regulatory and compliance reasons. But yes, I've been looking at technical analysis, for over 30 years. I did some courses, and I'm looking at the weekly chart of gold here. So I'm looking more here in the next 2 months. And does that mean I'm going to sell my gold because of what I'm seeing here, my physical gold and silver? No. This is just to give you an idea. I think physical gold and silver is not for trading. And you might want to trade the paper gold, but all you do by trading the paper gold is give ammunition to the banks. So I would stay out of paper gold trading, like futures and ETFs, but it's up to you. But what I see here in this chart is, first of all, let's look at that spike we had. That was 4th of December. I was talking about the London and New York price catching up with the Shanghai premium. So we had that spike, but then we came back down, like right after that, and the next week we went below 2000 to 1973. That was the low, and then we picked back up, and we finished the year at 2060, I think, the price of gold. And then on February 12th, we broke below 2000 again, and the low was 1984. And then we broke out of this falling wedge, and ever since then gold has been basically going up in a straight line. This is a weekly chart. There are fluctuations, of course, but yeah, we went up almost in a straight line to the high in the beginning of April 8th at 24.31. And then we consolidated. We consolidated in this triangle here, which took about 4 weeks. We've broken out of it, and now we're breaking the high from February. So how this works, by technical analysis, and of course technical analysis is not always perfect. We could see gold turn around and correct back down, but to me now it looks so strong here in the medium term that if you take the move from February to April and you extrapolate it from the breakout of that triangle, I get 2,720. And it took about 2 months for that first, the first move from 1984 to 2330 or 2430 or 31. So I think it could be another 2 months from that breakout, or from, from the low, from the breakout, which is started on the 13th of May. So somewhere in July, we could see gold up there. Is it a dead certainty? No, but it's possible. That's how I see it. And from there, we could have a correction back down. As I said, I think this is a very long term. It's a secular bull market. And if you look at this other chart here, and this is a very long term chart going back to the early 70s. It's a logarithmic chart. It gives you the percentage change, not the nominal change. And you can see that we're starting a new leg up in gold, and it still looks very nascent. It looks like we're still like in the first or second inning of this move. So that's why I see a lot of potential still, but not in the next few months or even year, in the next few years. What about silver? Well, silver, of course, we broke through that 30 level. I don't have to tell you how important it is. I still think we could maybe this week, we could see it retest that level, go back down and test 30, just like we tested 26 recently after going from 26 to almost 30. We'll have to wait and see. Overnight, though, we've been up as high as 32.53. We've corrected now. We're at 31.80. It's still up about 32 cents. Where's gold? Well, 24.42, and we've had a high of 24.50. So yes, you need to be calm. And if you've been buying physical gold and silver for a long time, there's nothing to worry about. I would say, yeah, just sit tight and keep watching it and keep adding on. I think there's still a lot of, a few years or even more of this to come. This is not, unfortunately, this is unfortunate in that it means the currencies are in a really bad place, and it's going to hurt the majority of the public because very few people are aware of how currencies work. They're only looking at the Dow, the fact that it's up above 40,000. They think everything's fine, but I think far from being fine, things are really not great. Not just domestically on the economic front and inflation front, but also geopolitically. My hope is that what happened yesterday with the president of Iran was just an accident and things stabilize. But you never know. And with that, I'm going to wish you all a very good start to this week. Take care. Bye.